Good afternoon, one and all, and welcome to Starting Your Own Business. This workshop is made possible by generous support from the TD Charitable Foundation, and we very much appreciate their support in these challenging times. Um, I will give folks another couple of seconds to join because I think we're going to have more participants than have connected so far. Um, but as we wait for other folks to join, I'll tell you a little bit about myself. My name is Whit Ford. I'm a mentor with SCORE. I've been a volunteer here for about 8 years now and present a number of workshops for SCORE. I work with a number of clients starting their businesses and tend to work mostly with clients who are looking for funding or have cash flow questions or financial analysis questions. But everybody also has marketing questions, and some also have logistical or production questions. And so there are a wide range of questions that are addressed by many of our clients, and many of those are a portion of this workshop today. So our goals for today are as follows. I would like to start by saying that this workshop's contents tend to be more conceptual than detailed. We're not going to get into a lot of step-by-step how-to stuff. The goal of this workshop is more to make sure that you don't overlook any key areas as you consider starting up a business. We also have links in these slides to further information on important topics, which I hope will be very useful to you. You will receive a email with a recording, well, with a link to the recording of this workshop, as well as uh, a PDF version of the slide deck for this workshop. And that PDF should have clickable links in it for all the links that are on these slides. In general, I could summarize much of what I'm about to say by saying that the more you can research early and the more you can start building your team early in the process of launching a business, the better off things are likely to be. So that would be my attempt at a very brief distillation of what will follow. So to dive in, first, think about why you want to start a business, and then how you're going to have the business operate, and then exactly what is it that you're going to do. That order becomes important. The why is really what's going to get you out of bed in the morning when things are frantic. And so it's very useful to be motivated by your why for starting a business. The whys that people choose are all over the place. Some are because I want money, and others are because I want to help other people, and there's everything in between. So it's very helpful to think long and hard about your why and write it down somewhere. Have it be a part of your business plan. Have it be part of your goal for your business. Once you've done that, the what and the how are often easier to describe. The what you're going to do is typically a description of the product or service you're going to offer. The how you're going to do it is often a combination of the what you're going to do and why you intend to do it. But the how has a lot of detail. And so there's a lot of rich stuff to mine in this simple seeming diagram, but start with the why and then perhaps move to the what and then focus on the how, which connects the what and the why. By the way, I invite you to ask questions at any point during this workshop. You're feel free to unmute yourself or show yourself. I don't mind being interrupted at all. Um, you can also add a question in the chat if you prefer, and I will strive to get to it at the first place. It's a good place to stop and address things. So it's important to realize that a business is a lot more than what many people think of. Many people think of a business as being the product or service you're offering. But on the other hand, in order to do that, you need to have processes in place, policies. You may need to purchase equipment. You may need capital to do all of the above. You may need to purchase software after deciding on which software is most relevant to what you want to do. You have to identify the vendors you're going to rely upon, hopefully some backups for each vendor as well, in case one is too slow or their prices change or whatever. You may hire employees, and all of that is necessary in order for you to offer your product or service. So I consider the product or service you're offering to be the what you're doing, and all the other things I just mentioned to be elements of the how you are going about accomplishing that. Many people I've talked to who are starting a business are totally focused on the product or service because that's what they spend so much time considering. Many have not spent nearly enough time researching the processes that they're going to have to follow consistently in order to deliver a consistent quality product or service. If they have employees, they'll need policies for sure. But even just with customers, you may want to have policies that you've thought about in advance for things like when you'll give refunds. Are you going to guarantee what you sell in some way or not? Um, what kinds of claims will you make for your company or your products? All of those can be governed by policies that you've decided upon. What kind of equipment will you need or will you use, even if you don't say absolutely need it? And will that be from day one, or will that be only later once you start generating some cash as a business? Many businesses have a wide variety of software choices and will have to analyze what their options are before they're going to be in a position to decide which ones appeal to them. The same thing goes for potential vendors you might use. And you'll probably want to have a backup for each vendor who you might steer some business to every year just so you're not a stranger, even though it may be a small percentage of your total business. But if your primary vendor all of a sudden becomes unavailable or raises their prices too much, maybe you may want to go to your backup vendor at that point and have them switch roles in your mind. So lots of things to research and think about, potentially before you ever start the business. Because once you start the business, you're going to be really busy running it. And you may find that time to research things like this doesn't exist anymore. So these are all things to look into early while you're developing your business plan, as opposed to after you start operating your business. Your job as the owner of the business is to develop your plan, which doesn't have to be extremely detailed. It might just be a few pages, but it could go into great detail. It all depends on the complexity of your business. You also are responsible for raising the funds that your business is going to need. Where are you going to find them? We'll talk more about that later. You, as the owner, are probably going to be the most convincing salesperson your business is ever going to have. So even if you're not particularly comfortable with sales or don't have a lot of experience with sales, this is something to get comfortable with, because even if you hire a salesperson, you will probably have some clients that want to talk to you, the owner, before they sign any deal. It's your responsibility as the owner to build your team. And we'll talk more about who you might consider to be part of your team later. It's probably a broader and wider list than you might have imagined. It's up to you and or members of your team to develop your processes. And it's certainly up to you as the owner of the business to monitor your financial statements and make sure that your business is accomplishing what you wish it to accomplish. And your financial statements can also give you some advance warning of potential trouble ahead. And so it is really important for you as the owner to get comfortable looking at your financials regularly and using them to look ahead a bit and anticipate any troubles in advance so that hopefully you can be prepared for them. All of these are things that you might wish to delegate some or many of to other people, but ultimately, as the owner of the business, they're on your plate. And yes, you can get help from other members of your team, but if things go astray, the buck stops at your desk as the owner. So, what resources do you, as the owner, need? Well, obviously, relevant personal experience can be very useful. Uh, you need a tolerance for risk because every business brings inherent risks. And if risk is something that above a certain level raises anxiety for you, then you should ask yourself how likely this business is going to be to reach that anxiety producing level for you. And think about your tolerance for that. Almost every business I've been involved in has had anxiety producing moments. The question is, are they tolerable for you? Ideally, you will have one or more talents that are relevant to the business you want to start. Not everybody does. Sometimes they develop them in the process of starting the business. Sometimes they hire subcontractors. Sometimes they hire staff who have the needed talents. But it helps if you have many of the talents needed. It becomes important to have a passion for what you're doing because there will be times of success, but there will also be times of challenge. And the more passionate you are about the why of what you're doing, the easier it's going to be to get through the tough times.
So I have a quick question.
Yes, please.
Um, so what would be like the most like important step if you're building from the ground up? Like we're just starting out. We talked to the SBA already, and they told us it was beneficial for us to listen to some of these seminars before we get started. So what would you think would be like the best or the most important first step for us? Is it the
Uh,
funding, or should we get like an architect to do the building out, or is the financial plan?
I'll get into this more in a few slides, but the market research is the most important part, in my opinion. You need to be not just confident, but you need to have information, data to back up your sense of what the market need is and how big the market is likely to be for you and how much competition you're going to have. Because any source of funding is going to be very interested in that. And the more you know about it first, the fewer missteps you're likely to make in the course of developing your product, service, processes, etc. So market research is definitely my number one. And I'll talk more about that later. But does that answer your question sufficiently for now?
Yeah, kind of. Well, what we're trying to do is it's like a roller skating rink slash. It has pickleball with pickleball courts in it, and then a
Hmm.
bar then a bar lounge. There's no other roller skating rinks that's doing that, so we don't
Right.
have too much. We don't have much competition. There's other roller skating rinks, but they're not doing what we're doing. And
So
they're a
are
lot
you going to
smaller.
expect that the pickleball players are going to have skates on? That would be exciting.
No, 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 no. It's gonna be separate. I hope they won't do that. That's a pretty big liability. But yeah.
That's true, yes. So in your case, what I mean by market research is how many people already know that they're interested in roller skating within a certain radius of your location?
Mhm,
How many pickleball players are there within a similar sort of radius? And what other pickleball facilities are there that they currently use? What do they think about those facilities? What are they looking for that are not in those competitive facilities that you might offer if you wish? Um, and then by the same token, what is it that roller skaters want that maybe they have not found in past rinks that they've patronized? And maybe a bar is the answer, maybe it's not. But just the fact that there is no other place to skate means you'd be the only game in town. The question is, are there enough skaters within the zone likely to travel to you to support the overhead costs of your business?
mhm.
And that's what I mean by market research. So you might find that using whatever databases you can or doing some surveys on social media, you could find that, there are 500 potential skaters within the radius you define. My first inclination would be to say, well, probably half of them or less are actually going to become regular patrons. In which case, is that enough for your business?
Mhm.
And so that's not just a marketing question at that point, that becomes a financial question as well. But all of your financial analysis is going to be based upon the results of your market research.
Okay.
So, anyhow, we'll come back to these topics. So, fear not.
Yep.
Um, you also need the support of family because they're the people that are going to say, "Hey, where is that person?" And when you're off working on your business, they may also be people you're counting on to pitch in to help with the launch of your business in one or more ways. And so it's really helpful to have a supportive family. You are going to run into a whole bunch of new stuff you've never seen before, never heard of before. The learning curve in your first year is huge for everybody. It was for me. And so it really helps to enjoy learning new stuff because there's going to be a whole bunch of new stuff that you got to learn if you're starting a business. You're also going to need money, funding. We'll come back to that. You'll need time because the business is likely to suck up a lot more time than you might expect. And because of that, you need energy, you need your health. I mentioned skills earlier, but you may need either existing skills or you may need to develop some new skills to help you in establishing or managing your business. It doesn't mean you have to have everything now, but you have to be ready and willing to learn the stuff that you don't already know. And as I said, you need a why that engages you and keeps you motivated to spend all this time and energy and money on your business. So this is sort of a generic list, and you may say, yeah, yeah, yeah. But I encourage you to think about each of these because they are all important. And I think you'll be surprised a year from now, looking back on things, how important almost every bullet point on the past two slides ends up being to you. So, to start with a negative, um, the top reasons that startups fail is that they ran out of cash or were not able to raise enough new money. So, that highlights the importance of having a cash flow forecast that anticipates the amount of money your business is going to need to get you to the point where it starts generating cash on its own. Many people look at the cash needed to start the business. That's not enough. You also need cash to operate the business for the first X months until you start generating cash. Many people say start being profitable, but there's a difference between profit and cash flow. Often it can be quite small, and so it may not matter. But just in case, I advocate that you focus on your cash flow rather than profitability. And you need enough cash to get you through all your startup expenses, which will probably be higher than you expect, as well as the first umpteen months of operation. For some businesses, they might be cash positive in a couple of months. For other businesses, it might be a couple of years or longer. So having a well thought through cash flow forecast is incredibly important to ensuring the success of your business. The second reason the second reason that startups fail is often the market need is either not there or not quite what they had assumed. And that's why I answered your question as I did a minute ago. The better you research your market to start with, to know not only where it is, but also how big it is and what it is they really want, and we'll talk more about this, the more likely you are to set up your company in a way that is better able to meet the market need that you've identified, which greatly reduces the risk of failure for you. So, after thinking about your why, then define your what. But to do so, research your target markets and verify you understand exactly what the market values. And only once you've done that will you have enough information to do the other research you need to do on your company, such as what vendors you're going to use, what products you need to buy, what's your building going to cost to build or lease, et cetera, et cetera, et cetera, which will then give you the information you need to develop a cash flow projection. And most people tend to try to be realistic when they develop a cash flow projection. In the end, you're probably going to need more cash than the cash flow projection says, but hopefully your cash flow projection is in the ballpark. And so I would treat whatever the total amount of cash your projection says you're going to need, I would treat that as a minimum and try to make sure you have at least that either on hand or coming in before you need it, before you start spending money on the business. And we'll come back to cash flows again. So, starting with your market research, identify your likely customers. What attributes will they have in common? This is often called developing a buyer or a customer persona. Do they tend to group in a certain age range, or are they typically, or most commonly, a particular gender? Or do they tend to have a certain income range? Do they tend to come from a certain geographic area? Are they in a particular life stage? Do they have specific occupations, interests, hobbies? What are their politics, if that's relevant to your business in some way, or the causes they support, or the goals that they're pursuing in life that maybe your business is going to help them meet? These are all things which may end up being an element of your value proposition, of your marketing message that you use to attract people to your business. So, in the example we just heard about for somebody starting a skating rink, there may be a very wide age range, no particular gender uh, preference. It might fall within an income range, but possibly not. It definitely is going to serve a geographic area. It'll probably serve a wide range of life stages. Um, Older people who remember skating when they were younger might enjoy it, but it's probably younger people that are going to visit most frequently. At the same time, roller skating is something that has been a fad at times in my life, and it's been much more popular in one decade than it has in the next, and then that changes in the following one. So, life stage may be a factor today, but life stage may be different in 5 years. Occupation may not matter for roller skating, but their interests and hobbies may. If they love ice skating, maybe they like roller skating in the summer. Um, if they don't like ice skating, maybe they always like roller skating. Um, what hobbies do roller skaters tend to have? What other hobbies, I should say? You may find that for some strange reason, there's huge overlap between, I don't know, knitting and roller skating or something like that. And so you may find that some other hobby is a very strong indicator of a likelihood to be interested in roller skating, and therefore you want to market to those people. Um, so for some further assistance in defining your customer personas, there are links on this page to an article and a video that I hope will help you in researching and defining the typical attributes of the majority of your customers. This won't describe 100% of your customers, but this is going to guide who you market to and your marketing message. So seek market input early, and by that, I mean try to understand your customer's perspective. A ton of people that I've worked with start off saying, "Oh, I've got this great idea, and here's my product. It's got 357 features. It's awesome." Um, that's great. Chances are your customers are not going to care about 357 features. Which two or three or maybe five are of greatest interest to them? And to figure that out, you have to have a very concise and accurate description of the problem that you are solving for your market. So that is a wonderful first question to start with. What problem am I helping people solve? Going back to our roller skating example, um, it could be physical fitness and aerobic activity. It could be socialization, network building. It could be a venue to have a group meet, not just for socialization, but also perhaps to have a meeting, after which we'll go skate or something. Um, but this is something that you often really need to talk to your potential customers about first and get them to describe to you in their own words what their frustrations are with their current options. And ideally, you'll walk away using your market's wording for the challenges or problems or whatever that they're facing that you hope to help solve for them. In the process, you want to understand how and why it is a problem for them. Because if you can get people to explain more about why they feel it's a problem or how it's a problem for them, you're going to have a much stronger and more accurate sense of their view of the problem, which will undoubtedly have a profound influence on the way that you market your solution to them. You can also ask them if they think that your offering is going to solve their problem for them and see what they say. One suggestion that I mentioned later is try to never ask yes or no questions. Try to ask open-ended questions. Do not ask, will my solution solve your problem? Because if they say no, how do I interpret that? I mean, yeah, I know it means no, but it doesn't help me tweak what I'm offering at all. So a better way of asking the question would be, uh, is there anything about the solution I've just described that you think I should do to make it better for you or to improve it for you? Or what about my solution does not appeal to you and why? Those are much better questions because it gets them to start talking in complete sentences instead of giving you yes or no answers. You also want to know why somebody will buy from you instead of a competitor. In the case of the skating rink, maybe they're the only game in town, but they might not be the only bar in town. And so you're going to have a lot of competitions for a place to have a drink, but you might have no competition for skating. And pickleball will probably have some competition, probably not as much as bars. Um, so that raises the interesting question of, does the combination offer a greater value to people? Or do some of your potential customers see some of your other offerings as a negative? I don't know.
Oh, also we're gonna have also we're gonna offer party rooms for like kids and teenagers or schools when they bring the kids in. We have party rooms for like private parties if they want to
Yeah,
do a private
I
party in
think
there.
that will be very important. So, um, but just because I think that is great, I'm probably not your target market. So my opinion is not very useful to you in your research. I mean, it's always nice to have somebody say they agree with you. That's yes, but you want to go talk to the people that you intend to be marketing to see how often they think they might use one of your function rooms. Um, what size group would they typically be looking to invite? Uh, and would they be serving food or not? Or what do they want to see in the function room? Do they want to see gym mats or do they want to see tables with chairs? There are all sorts of interesting questions that each of your offerings potentially raises, and each of them is worth exploring in depth with people who you look at and say, yes, that's the person that I think is likely to be my customer. Um, the more research you can do in talking directly to potential customers before you spend a dime on your facility in any way, the lower the risk of opening the business becomes. So once you've talked to a bunch of people and you get to the point where you feel as though you're not learning anything new in the past 5, 6, 7, 8, 9, 10 conversations you had with people because you've heard it all before, and you have a good enough sense of what percentage of people feel this way versus what percentage of people feel that way, then before you take the next step, stop and look in a mirror and ask yourself, does providing the solution that I think I've outlined in talking to all these people, does providing that solution still interest me? Sometimes the answer is, oh, no, the solution has evolved sufficiently from my initial conception to now to where, no, this doesn't really grab me. I count that as a huge moral victory. It's much better to have discovered that now before you're starting spending big bucks and a ton of time than to discover it 6 months in. So I'm not saying starting a business is a bad idea. I'm just saying doing the research first to discover whether this does not appeal to you after all is a great idea. If it still interests you, great, keep going. So your next step is to develop your value proposition. Now, this is a brief and to the point sentence or two that describes what you offer, who you offer it to, the problem or problems that it solves for your customers, and what you offer that's unique. Why should people buy from you instead of somebody else? Um, Not everybody has something that's totally unique, but the more you can find that seems unique or hard to find, um, the better. Now, it's quite possible that what makes you unique is you're the closest service of this type. Cool. Okay, that works. Until another competitor opens up if the market in your area is big enough. So coming up with a value proposition that is brief right there is hard. Um, and I go through multiple drafts of refining it and rereading it a day later, saying, nah, that word rubs me the wrong way. Having a friend read it and they raise some objections. And so I think about ways I can tweak it further. Anyhow, it's an iterative process. So revisit it periodically. Initially, it might be every day, and then once a week, and then once a month. But even once you're in business, you probably want to be revisiting it at least 2 to 4 times a year. Not that you change it. You just want to make sure that with everything you've learned about your customers since you started operating, that your value proposition is still on point. Most new business owners have relatively little experience selling to the market that they intend to serve. If you're lucky, you do already have a ton of experience. But many people find that it's not until they open the business that they really start racking up the hours and hours and hours of sales experience. And that's when they really learn how to talk the customer's language, phrase things in a way that engages the customer, and uh, move the customer from hemming and hawing about, do I want to buy it or not, to knowing that, yes, I want this. And so having a strong value proposition central in your thinking can really help you communicate effectively and efficiently with a potential customer. And so once you've committed to paper, that's great, but revisit it and don't be bashful about editing it to improve it as you gain experience. I've added 3 links here to a webinar that's all about developing your value proposition, but also 2 websites that can help you uh, come up with a strong value proposition. Something to work with other people, such as a SCORE mentor like me, but it's something that takes time and effort, and you really can't do particularly well until you've done your market research. So test your assumptions and test the terminology you're using, the exact words you're using, the phrases you use by asking your customers open-ended questions, or your prospective customers, I should say. The more you sell and the more you learn about the customers, the better you're going to find yourself able to look at your value proposition and say very quickly, oh, yeah, that's still totally on target. Or, I'm missing something that I'm starting to see in my customers, and let me see if I can include it now. It's important to note that if you serve more than one market segment, each one may have its own value proposition. So, sorry to pick on the skating rink example, but since it's at hand, um, you may find that people wanting a function room have no interest in the skating rink or the pickleball, and maybe only a certain percentage have an interest in the bar. They may be a lot more interested in, do you serve pizza? I don't know. Um, Similarly, the skaters may have no interest in pickleball and vice versa. Or maybe they do. Uh, if people are going to be interested in both, then maybe you want to investigate having some sort of a membership model instead of an admission fee model, or maybe you want to have both. Um, there are lots of possibilities, but they all depend on what your potential customers tell you they value the most about each of the services that you are offering. So, if you're offering 3 services, maybe you can roll in all into one value proposition, but maybe you have 3 value propositions because you're going to be marketing to 3 different market segments, or 4 if you consider the bar separate from the function room, pickleball, and skating. So, something to think about. then once you're up and going, don't overlook the fact that your markets can evolve with time. So, for example, when COVID hit, everybody's market changed drastically. And then COVID fizzled out, sort of. It's still with us. But people spent a lot of money in the old way again, but a lot of restaurants are finding they don't have the customer base now that they had pre-COVID. So your markets evolve over time, and you need to constantly return to revisit your value proposition to make sure that it still addresses the markets as they are today. Now, you'll probably realize that as you're constantly selling, but the reminder is to go back and revisit your value proposition because maybe your marketing messaging needs to be tweaked as the market evolves. And before tweaking your marketing messaging, tweak your value proposition. That's the end of my marketing overview. Any further questions on marketing questions before I dive into other topics?
Not for me.
Okay,
Not yet.
that's fine. Yeah, thank you. So when I said build your team earlier, many people probably assumed a base of employees. That is not what I mean at all. Although employees are included, they're obviously part of your team. Um, a business mentor, somebody like me, or there are many other mentorship organizations that can help you out, can be an incredibly valuable part of your team, particularly when you're starting out. But even once you're growing, to have a third party who's, so to speak, disinterested, doesn't have anything to gain from your business, can be really useful to bounce ideas off of at any stage of growth in your business. Even more valuable can be business peers. If you find somebody else who runs a similar sort of business, who you will never compete with because they're in a different geographical area, they might love to talk to you just to compare notes every once in a while. And they could be incredibly helpful to you, telling you the challenges they faced when they started up or challenges they faced in their market and ways they found to better address their market. So do try to build a network of business peers who are not necessarily competitors or are distant enough competitors that you don't mind cooperating with them and stay in touch with them over time. You're probably going to need an attorney at some point, hopefully not for anything serious, but just to draft standard language that you have either for your contracts with your customers or for your um, employee policy handbook or any number of other things, such as if you're going to have a partner and you need to draft a partnership agreement, which I'll talk more about in a minute. Um, an attorney can be absolutely essential. Yes, they can be expensive, but if you prepare well before meeting with the attorney, it doesn't have to take that long. It doesn't have to get that expensive, but their advice in applying generic things to the specifics of your situation can be worth every penny that you spend on them. Think of your banker as part of your team. If you're getting a loan, your loan officer is definitely part of your team. But even if you don't have a loan officer because you haven't yet taken out a loan, get to know the loan officer at your bank so that they're not a stranger on the day that you walk in and say, "Hi, I'd like to talk about getting a loan for my business, please. Thank you." Um, Also, talk to one or more insurance agents and ask them, I'm starting this kind of a business. What kind of insurance would you recommend that I get for my business? I used to be a math tutor, and to my surprise, I learned that if a student came into my home for math tutoring, if they slipped and fell, my homeowner's policy would not cover that. I had to have separate business insurance to cover that because they were there for business purposes. Um, Surprise. Fortunately, it was never an issue, but anyhow, talk to an insurance agent early, ask what they would recommend. It doesn't mean you have to buy all of those policies. You can get them with high deductibles if you wish, or not. But this is just one additional step in being informed before you start your business, and it doesn't cost you any money. They get paid when you buy a policy. They get paid out of your premiums. So talk to an insurance agent or two or three so you can compare prices and see if they offer consistent advice. And that way, you know in advance before you start your business what sort of policies you think you're going to want to have coverage from. Similarly, talk to an accountant. Maybe you're going to use them, maybe you're not. Maybe you're just going to use a tax accountant at tax time, but it can't hurt to have figured out if I want an accountant at some point, who do I want to use? So sit down with a couple of them for just a quick meet and greet interview. Ask them to explain a couple of topics that you'd like explained, and see if their explanations make sense to you. If their explanations are all in a foreign language as far as you're concerned, then maybe they're not the accountant you want to work with if you're not going to understand their explanations. Uh, See what their availability is, how much lead time they need, how swamped they are at tax time. They're all swamped at tax time, um, etc. But do your research before you start the business so that you have an idea who you might want to use once your business has been launched. And for some businesses, you may find that there's a trade organization you can join. Doesn't apply to all that many businesses, but if there is a trade organization, joining it usually involves a membership fee, which may or may not be high. Um, but being a member may get you access to things like better health insurance or other forms of insurance. For example, I think if you're an architect, you almost have to be part of a trade association in order to get insurance for when the building falls down, which hopefully never happens, but things like that. So trade organizations can be invaluable to getting some services that you may need in your particular industry. They can also help get market research that's been done nationally for your markets. And so do research whether any relevant trade organizations exist, and if so, whether any of the services they offer might interest you or not. There are a whole bunch of other potential regulatory things you will need to be aware of. Some of these may apply to you, some may not, but it's worth looking into all of them just to verify that they do not apply to you. First of all, if you are looking at leasing a property, there are a couple of complications. If you're going to sublease from somebody else, you need to make sure the landlord is okay with that. You don't want to sign a sublease agreement and then find that it does not get the landlord's approval. Even if you're signing a lease directly with the landlord, you need to be totally transparent about exactly what you're going to be using the property for and make sure that that is part of your lease so that the landlord cannot come back and say, I did not approve of this use of my property. Once you've identified a specific location and you know the landlord's okay with it, then you want to go to the town or city it is in and make sure that it already has or can get the business license or approvals that are needed from that town. The exact ones required vary tremendously depending on the type of business and the town you're in. For example, if you're in Portland and you want to run a food business, you need a commercial license for your kitchen if you're going to be cooking on the premises. And yet, for other towns, you may not need one. So this is a major license approval in some towns and a non-issue in others. Regardless of whether you need a license, you may need approval, such as from the fire marshal or from the code inspector in town before you can legally open your business to customers or even to employees. You may need to pay attention to the zoning and any historic overlay districts for the particular location you're looking at. You almost certainly will need to get fire marshal approval, particularly if you expect to have customers visiting you. The fire marshal will tell you how many customers you're authorized to have in the building at any one time. And that is a really important legal constraint because if you exceed that limit, all sorts of bad things can happen, including possibly things like your insurance not covering you if something happens. You'll want to be aware of local taxes. Many localities in Maine may tax you on your business assets, not necessarily your income, but your business assets. So any assets held on the premises, machinery, etc., may be subject to local taxes, in addition to being subject to real estate taxes if you own property in the town.
Now, I got a quick question. Now, with
Sure.
us, like we have 4 partners, and we're all veterans, like 100% disabled veterans. Does that matter with the taxes, or does that vary by each city, whether they charge the property tax or
The property tax is usually levied on the property. So, and by that I mean real estate tax. That will be the owner of the property is taxed. If you are purchasing the property yourself as a partnership, then the partnership is the entity that will be taxed, and that will be an expense that's allocated amongst the partners based on the percentage that you've agreed to allocate expenses amongst partners. So your partnership agreement could say that we all split expenses evenly, or it could say, no, expenses are split according to certain percentages specified in the agreement. Um, so real estate taxes would be one of those expenses. If there are other taxes for business property, such as machinery you have, or the rink that you install, etc., those once again are probably going to go to the partnership taxed as an entity. So we'll get into that a little bit more when we talk about entities coming up shortly. Um, but if you're just a partnership and not a multi-member LLC, then presumably it'll be your partnership that is taxed, and you'll each get a K-1 each year at tax time telling you what percentage of the tax you are responsible for, well, deducting on your taxes. You will have already paid it at tax time. Does that help?
okay? Yes.
There are also potential state and federal regulations that may apply. Some businesses require licenses at a state or federal level, not all that many, but you should make sure that your particular type of business does not require a state or federal license. If you need a liquor license, that's local. If you need a commercial kitchen license, that's local. You may need to ensure you comply with the ADA, the Americans with Disabilities Act, if you will have clients or customers visiting your premises. If you have employees, you need to be aware of labor laws that you need to comply with, and all owners and managers need to be well educated on labor laws because not being educated on them is just inviting a future lawsuit. Similarly, if you're hiring people, you need to be acutely aware of immigration laws and you need to verify that they are legally able to work before hiring them. You also need to know Social Security, Medicare, and income tax withholding procedures. Hopefully, a payroll company you use if you have employees will make all this much easier for you. And then lastly, the product or service you sell may be subject to sales taxes, in which case you will need to register with the state of Maine for sales tax ID, and you'll need to know what you need to do to submit sales taxes collected and how often you will need to submit sales taxes collected to the state of Maine. The frequency with which you submit them is a function of how much you expect to collect per year. And so if it's a big number, you may have to submit them frequently, like every few weeks or once a month. If it's a smaller number, you may only have to submit them quarterly or even annually. So, long list of things to do some research on before opening your business to make sure that you know who you need to register with and when, and what reporting requirements will be for your specific business, because they do vary from business to business. As threatened, here we get to what kind of business should you, or what form of business should you establish? The simplest, the one that is most common probably in Maine, is a sole proprietor. It's just you, no employees. You could have employees, but a sole proprietorship means that you are the business, and if somebody sues the business, they are suing you. That means that your house could be at risk from somebody suing your business. Your retirement plan could be at risk, I think. I'm not certain. I'm not an attorney in that department, but um, as a sole proprietor, if you have the potential for high risks, then you might wish to choose a different form for your business. If I'm knitting wool caps for somebody and they're just buying them at retailers, I don't sell them directly, you're probably at relatively low risk unless you're using some type of wool that causes a life-threatening allergic reaction. Um, I don't know, it could happen. And so think carefully about the ways that a malicious customer might come after you. And that's definitely something to think about when you're deciding on insurance for your business. But it's also something to think about in deciding what form you wish your business to have. A sole proprietorship puts you, the sole proprietor, at risk for the liabilities of the business. End of story. Similarly, a general partnership where you have a partnership agreement amongst the partners, but you've not established some other form of business, potentially has all partnerships sharing in the risk of the business. Maybe sharing that risk by some percentage specified in your partnership agreement. You will also hear about limited partnerships. Generally, a limited partnership will have a general partner who's assuming, or one or more general partners who are assuming the risk of the business, and limited partners who are not assuming the risks of the business. Definitely the realm of stuff you should talk about with an attorney before you establish a limited partnership. The more common forms these days are limited liability companies and limited liability partnerships. A limited liability company could be a single member LLC in Maine, and that means that there's only one member, the owner, and it's a limited liability company. They may have multiple employees, they may have a bunch of subcontractors, but they are the only owner of the company. Really quick and simple to establish, and the LLC becomes a separate legal person. So a customer can sue the LLC, but in theory, if you've organized the LLC and operated it correctly, they cannot come after your personal assets. So setting up as an LLC is a way of reducing the risk to your personal assets. Similarly, setting up as a multi-member LLC, which is in effect a partnership, but it establishes a new legal entity, the multi-member LLC, can protect all of the partners from LLC liabilities if the LLC was properly established and operated. You also could set up as a C corporation. C corporations generally have shareholders, and shareholders expect a return in the form of dividends typically. Uh, they may also expect you at some point to go public or sell out to another company so that they get their money back. So if you're setting up as a C corp, it's often because you expect to grow really quickly and or get venture capital backing at some point and or go public or sell out to maybe a private equity group at some point. So people who start off as a C corporation often expect to go on a high growth trajectory path, typically serving a market in the hundreds of millions of dollars. So they're not serving small markets typically. There are exceptions to every rule. So the vast majority of clients that I work with establish LLCs. Doesn't mean that's right for you. You can get more information by clicking on the links on this page. Each one of these underlined items is a link. The Secretary of State's website for Maine does a nice job of describing the differences between each of these in brief. Um, but you may also want to talk to an attorney and a tax accountant to be aware of the tax implication differences for each of these forms. You may wish to start as one form that's quick and simple, and then later on change to another form. But once again, talk to a tax accountant about the potential implications of doing that. There could be tax consequences at the time of the change if your company has acquired assets. So I told you probably a little more than I know about all of these items, but hopefully I've given you a good overview of the types of people that might be interested in each of these forms and why. If you are in a partnership, whether it's a sole proprietorship type of partnership or a multi-member LLC type of partnership, it is critical, and I cannot overemphasize that enough, that you have an operating agreement, also known as a partnership agreement. Uh, this specifies, well, it's basically a prenuptial and a divorce agreement all in one with a bunch more stuff thrown in too. So it tells how new partners join, how existing partners leave, how the partnership value will be allocated amongst partners when you sell, who has what vote for management decisions, who gets what percentage of cash flow or profits. Those can be different from the percentage vote you get. There's all sorts of flexibilities possible in a partnership agreement. So it is really useful to talk to an attorney who is experienced in the kinds of troubles that partnerships get themselves into in drafting your partnership agreement. So they can anticipate things. It's all in writing from the beginning. And when 10 years, 20 years from now, you decide, nah, I've had enough of this, buy me out, you don't get a bunch of blank stares from your partners telling you, uh, we don't intend to buy you out. There's nothing in our partnership agreement saying we have to buy you out. You can leave, but you get nothing. If you expect to be bought out, it better be in your partnership agreement. And by the same token, if one of your partners leaves and looks at you expectantly, you want to have how you value the business be something that's in your partnership agreement, because otherwise that's almost guaranteed to become a point of dispute amongst the partners. And that can be a very expensive dispute if your company is now worth a lot of money. Every attorney I've talked to has said every partner should engage their own attorney to review the partnership agreement to look after each partner's unique interests. There are some exceptions that people say, well, okay, if you really want to, you might be able to get by with one attorney working for the LLC saying, yes, in general, it seems fair, but you're not going to get advice that is specific to you and your specific interests by doing that. So, by all means, maybe share one attorney in drafting the partnership agreement, but then have each of your own personal attorneys, who's not the attorney that drafted it, tell you the pros and cons from your perspective. Otherwise, you might regret it years down the road. Some other things to do in case the list wasn't already long enough. Um, Research any licenses that your business might need. Not many businesses need to be licensed, but see if you need any professional or business licenses. And if so, good to know about it in advance. Even if you don't need to apply for them now, you probably want to research them now to figure out if there's an application process, what's needed, and how long it might take. Once you're convinced that you're okay and you can proceed with the following things, then the next step is generally to research a potential name for your company. You have links here to searching the Maine company registry to make sure that name is not already used in Maine. But you probably also want to research the U.S. Patent and Trademark Office to make sure that the name has not been trademarked nationally for your type of business. Once you know the name is not in use, well, you might also want to research a few search engines to make sure that the URL you like to use for your website is not in use. That's another thing you probably want to search. Um, then you're ready to establish your company. In other words, to register with the state in which you wish to be registered. Um, Consult an attorney for any questions you have, send in your application, receive the certificate of formation. You don't necessarily need an attorney involved to register your company with the state. A lot of people just do it all themselves. Takes 2+ weeks and costs $175 in the state of Maine. It's pretty easy to do. A lot of people have questions about the application, which work with your business mentor to get answered.
Hey,
Yeah.
so we have the LLC and the company name and everything already. We had it for like almost 3 going on 4 years.
Mhm.
Our problem was finding a commercial property. So now that we found the commercial property, what would be like the like we did the walkthrough with the landlord and gave him all the ideas and everything. And then we went to the SBA. And the SBA they weren't really helpful. It wasn't really helpful. They just said
Yeah, most SBA
just
loans
watch
come
the
through banks.
okay, so the next step would be like the marketing and then bring it to the bank.
Yes, the bank is going to look at you and say, you're a new business, and I'll talk about funding more in a minute. And they're going to want a personal guarantee from all of the partners to pay off the loan if the business cannot do so. Um, the other option, well, there are other options, and we'll get to those in a minute, but SBA loans come through banks generally, and the bank is going to tell you what you need to do to get that loan. They're going to be the vehicle through which the loan comes. They're probably going to service the loan for the SBA. And so they're probably also going to want to insist that you have all of your banking at that bank. Anyhow, more
Okay.
on funding in a minute. Um, so once you've got your company established and you are an LLC or a partnership or C Corp or whatever, um, get your employer identification number from the IRS. You can follow this link to get it free and instantly from the IRS website. Uh, it is, in effect, the Social Security number for your company. And even though it's called an employer identification number, even if you do not have any employees, your bank may still require you to get one as a company. And that helps keep your personal finances separate from your company finances. You may also need a sales tax certificate from the state if the products or services you're offering are subject to sales taxes. And so that's another application to get in the works. If you have questions about whether you are subject to sales tax or not, call the Maine Department of Revenue. They are the person to get the answer from as to whether each product or service is subject to sales tax or not. It can get complicated. Next step would be to open a business checking account and or any other business accounts you want, such as a credit card or debit card, etc. In order to do so, you're normally going to need to show your certificate of formation so that they can verify the exact name of the business. And you'll need to provide your federal EIN number. You can just print out a copy of the PDF you get from the IRS and show that to them as documentation that it's the same business name and this is the EIN number for my business. At that point, you may wish to obtain any licenses needed for professional reasons. I don't know, depends on the nature of business, whether you need that license back in step one or here at step five. For example, if you want to be a contractor in the state of Maine, I understand you now need a license. So maybe that's something you might want to apply for at step one, just to make sure you can get it. But if you need your business name to apply for it, you might need to get through step four before applying for it. Anyhow, that's why I suggested that you research any licenses needed first. You may need to circle back at the end once you have all this additional information to actually apply for the license. And as threatened, here we are to funding. The big question is how much funding will you need? So this is where your cash flow forecast can help. And as part of your cash flow forecast, you're going to be researching all of your startup costs. So in the case of our infamous now roller rink and pickleball and function center, there's going to be a bunch of costs to put in the rink. Probably if the function rooms don't already exist in the building, you might have to put in some drywall inside and or plumbing. You would have to almost certainly install all the bar equipment and all the install pickleball courts. So that's a whole bunch of startup costs. But then you start operating and you start building patronage and or memberships. And your first month, if you're lucky, all goes incredibly well. Word spreads like wildfire, and they're beating down the doors every time you open for the day. If you're not so lucky, it takes time to build your patronage, and you've got, 50 people who show up in your first month, 25 of which turn into regulars. The other 25 come back occasionally, just not every week. And then the next month you get another maybe 50 or 60 or 75. And the next month you get another 100 or 150. How long until you get to the point where you have enough people using your facility every month that you are generating cash after paying off, not paying off, after paying any loan payments you have to make, after paying any insurance you need to carry, after putting something aside for any triple net costs you're going to have on your lease, for utilities, for insurance, etc. So many companies find that they're not going to get to break even for 12, 18, 24, 36 months. Some businesses find it's only 2 or 3 months. If it's 2 or 3 months, that's awesome and that's great. But you want to do a cash flow forecast and you want to be very conservative about your revenues and pessimistic about your costs to have a very strong number in mind for how much money it's going to take to get you to break even. I hope if you've done all your forecasting right, that it takes less money than that. If you've got money left over and you're trying to generate cash, you can start paying down your debt early and you're a hero. That means more of your money goes to interest sorry, more of your money goes to principal every month than it does interest, and will save you a lot of interest over the life of your loan. In general, most businesses underestimate the amount of cash that's going to be needed to get to break even. So, uh, the underlined cash flow projection here takes you to a one-page, 3-year, well, I lied. It's actually 3 pages, 1 page per year, cash flow projection spreadsheet that you can use if you wish. It's not required, but we try to keep it simple, and I can help you tweak it to conform better to the specifics of your business. Everybody needs to tweak this spreadsheet because every business is different, and the way that you wish to project revenues will be different than the way I projected revenues. That's fine. There are a bunch of suggested expense categories in there. If some don't apply to you, fine. They're just in there as a reminder to think about it. If, as a result of projecting your cash flow and getting a loan and your partner's investments in the business and any other investors you get in the business, you have too much cash, that's a much better problem to have than having too little. Because if you run out of cash and you can't make the loan payment to the bank, all of a sudden they're foreclosing and you're out of business.
So
So
is there an actual worksheet where you plug the numbers in that you can print out to
yes,
plug the numbers in?
the if you look below the first page of this cash flow projection, it has provisions for 3 loans you could put in there. So you put in the loan amount, the likely term of the loan, how many years you're going to have to repay it, the likely interest rate, and it will calculate the monthly principal and interest payments for you and plug them right into the spreadsheet above. So you could then make several copies of this and play around with different loan amounts to see how that would impact your cash flow. Um,
Would it show the cost, like the entry fee, the cost of like renting out the party room, and the cost of the roller skate rental? Does it show all of that, or do we have to make those numbers?
that's all just lumped under revenue. So that's one line on this sheet because most people's revenue projections, as you just described, are very different from what I did in my business. So I generally recommend you have one spreadsheet you use to project your revenues. And in your case, you might be saying, how many skaters do I have each month? How many pickleball players do I have each month? How many function hall rentals do I have each month? Then below that, what does each one of those cost? And then the spreadsheet calculates what your total revenue would be for the month. You could then copy those revenue numbers and paste those values into the spreadsheet at the top.
And since we're just like starting out, we don't know that those numbers yet. Is
No,
the numbers that we put in all just projections to break even,
you're going to have
or
to make stuff up. Yep.
yeah, to make a profit, to
And
turn it profitable?
so your bank or anybody else you show this to is going to ask you a bunch of questions about where those numbers came from. And so
Okay.
that's when you show them your revenue spreadsheet. And they're going to ask you questions like, well, how big is your market and how do you know that?
Okay.
And you're going to say, well, I took the populations of the towns I serve, um, and I researched other towns of similar sizes that do have skating rinks. And I found the percentage of the population that tends to skate in those towns. And so I've used that same percentage of these towns' population, something like that. And if the person you're talking to says, okay, that sounds like a reasonable assumption, then you're off to the races. And if they say, I'm a little nervous about that market share you think you're going to have, how about reducing that 10%? Yeah. Okay, I'll do that and come back with a new projection.
Oh, okay.
But
That makes
they're
sense.
going to ask what you've assumed, where you got that information from, and if you can cite third-party sources, websites, research reports, market studies, um, census information from the U.S. Census Bureau, information from the town, whatever, the more third-party sources you can cite for the information you're using in your projections, the more credible your projections will be to somebody who's listening. And my guess is that they're going to ask you 2, 3, 4, 5, 6, 7, 8, 9, 10 questions. And if your answers to them are thoughtful, because you've sweated all these numbers, you know exactly where they came from. Um, and the assumptions you made were reasonable based on the third-party data that you've cited and shown that you're using. Uh, After 3, 4, 5 questions, they're going to say, okay, this guy's done his research and he's making reasonable assumptions. And he's not all pie in the sky. You know, he's not assuming he's going to be totally full week one. That's good. If he does better than that, that's great. But I want to make sure that the worst case is one in which he can still make the loan payments as well as the lease payments. So your landlord's going to have the same sorts of questions. So in general, I would much rather see a cash flow projection showing you having more cash than you need rather than just enough, because just enough is probably going to end up being too little. So if any construction is involved, construction costs have been just going up, up, up of late. Materials costs going up, labor costs going up. Time frames, you know, oh, I'm going to have everything built out in 1 month. No, it'll probably be 3 these days, or maybe 6. I don't know. Get really conservative estimates from your contractors and then plan for it taking longer than that in the projections that you offer to any funders. Where can you find funding? The most common sources are money that you already have in your savings bank or your retirement account if you want to use it for that or something else. But if you're going to use personal money, a key question for yourself is how much of your money do you wish to put at risk in your business? Normally, that's not 100%. But any other lender or investor is going to want to see that you have some skin in the game. So putting some of your money into the business is a vote of confidence that a lot of others are going to want to see. That doesn't mean you need to risk everything, but in the same way that a bank wants to see a home buyer put, say, 20% down, a bank would love to see you put in 20% of the total money needed to get this business off the ground. You don't have to put in that much, maybe, but if you can, that would make everybody more willing to participate. Second most common source is bootstrapping, meaning keep your day job and use the income you get from that to start your business nights and weekends, school vacations if you're a teacher, etc. And keep that going as long as you can until the time when you have to go part-time if your employer will let you do that, or only work a few days a week if you can do that. But keep your cash coming in from your other job as long as you can, because that has a huge impact on the amount of money you need from others. Next most common source is friends and family. This can be a bad idea unless they are totally comfortable with the risk that they're taking by putting money into your business. So it's always a good idea to have a written contract with them that explains to them that their money is at risk and may not be repaid. And if you intend to repay it, make it a note, make it a formal loan saying, you know, I will begin repaying it in year 3 and I will repay it over the next 5 years or whatever time periods you want to put in there. But give yourself a little bit of time to begin generating cash that'll be needed to repay it. And as one buddy of mine said, under promise and over deliver. So give yourself a long runway, a long period of time in which your business can become cash positive, longer than you think you need. before you have to start making good on promises you made to other people. There are grants and competitions out there. They often require a fair amount of work to put together the grant application or your entry for the competition. They may require presentations, etc. The outcome is uncertain. If there are 100 people competing and only five get money, you've got at most a 5% chance of getting some money out of it. Is it worth it? Is the big question. And in many cases, grants and competitions have a low enough probability of getting some money that a lot of people say, no, it's not worth it to me, even though it's free money. If it doesn't take much effort, it's an easy application. Heck, go for it. It's good experience. There's no reason not to, but maybe your time is better spent doing other things. That's for you to decide. Crowdfunding is something we've heard a lot about over the past decade. You probably are going to see influencers telling you about all the success they've had in crowdfunding. Some businesses will do better at crowdfunding than others. And the ones that tend to do best are ones that already have a large social media following. So if you wanted to try some crowdfunding for a skating rink, you could get on social media, reveal your plans for the rink, and use that as a means of gauging interest in the community. So that could be part of your market research. And then you could say, hey, how would you like to prepay your membership? And that's the crowdfunding part. Your first year membership is prepaid. You're going to have to be careful to put all that in an escrow account so you can't touch it until you know everything's a go and you've raised the amount of money you need. But that could be a source for crowdfunding, but not unless you've already gained enough followers. So, how much time do you want to spend on social media gaining followers? There are so many people looking for your eyeballs on social media these days that can be a huge time investment. Loans are a common source of money, but most new businesses are going to have to offer a personal guarantee. So if you're looking to borrow $100,000, the bank is looking to see that you've got $100,000 of equity in your home. And yes, it's going to be a loan to the business, but the bank is going to ask you as the business owner to make a personal guarantee of your personal assets to repay that loan. For a partnership, the bank is going to do the same thing amongst all the partners. If you cannot come up with enough personal assets to guarantee the entirety of the loan, then the bank is probably not going to be very interested in that loan unless you can get third-party guarantees, such as state programs or federal programs, such as the SBA that you mentioned earlier, who might come in and get you maybe a better interest rate or maybe a longer loan term or maybe just a guarantee on the loan.
So, quick question:
Yes.
if three of the partners own homes and one doesn't, does that matter or?
No, the bank only cares that the three that can offer some guarantee offered enough of a guarantee to cover the principal of the loan.
Okay.
So you might find that you can get a bank loan up to a certain amount, and hopefully that's enough. If it's not, if all the partners can keep their day jobs and use a combination of bootstrapping and a bank loan, that might get you where you need to be. The thing that I wanted to mention is if you get an SBA guaranteed loan, there may be some other fees and conditions that raise the cost of the loan, but at least you can get a loan. So, for example, some federal programs require you to get insurance in case you can't repay the loan. And that could be a couple $100 a month just in insurance costs that you might not have had to get if you did not need to apply for an SBA loan. So by all means, go through the process and learn what your costs might be. Um, but many people tend to not go for federal or state guarantees unless they need them because there's usually an extra cost to that guarantee.
Do you think being veterans, we have a better chance with the SBA or?
I'm not familiar with SBA loan programs. We have another mentor here at SCORE, Julie Viola, who is a banker who does a lot of SBA work, and we'd be happy to have a meeting with you and talk about the specifics. And she could tell you what she knows in general about the things that might or might not help you in applying for that program.
Okay.
Oops, sorry. And then lastly, venture capital is another source that people think of. Venture investors generally are going to want to get their money back in, say, 5 to 10 years' time. They are going to take a percentage ownership in the company. So if you don't wish to give up ownership, you don't wish venture capital. If you're willing to give up ownership, that's great. They typically want to see you looking at a plan that's getting to like hundreds of millions of dollars in sales within 5 to 8 years. So if you're not thinking that big, you probably don't want venture capital. However, you might be interested in private equity at some point. Uh, you might want to grow the company and then sell to a private equity group. They would buy you out, and at that point, it would no longer be your company. You might stay on for some period of time helping transition management to them, but that's not necessarily going to be a source of funding on day one. It could be if you have a really compelling idea, but if they put funding in on day one, they're probably going to become a partner on day one, which may not be what you want. So those tend to come with a lot of conditions, which can be of interest if you're going to go big and fast. But if you're not going to go big enough for their interests, they're probably not going to be interested in you. Um, As I mentioned earlier, you're going to need to understand your financial statements, your balance sheet, your income statement, your statement of cash flows. These three links take you to some brief blog entries that help you understand what those statements are all about. There's lots of resources on the internet you can use to learn more about them. You can also talk to a mentor or your accountant about them, but use these to manage your business and help you forecast what's likely to happen over the months to come. You do need to make sure that your your financials are reconciled to your bank statements at least monthly. That's how you catch problems that are starting to happen. So it's very important that you understand your financials and reconcile them monthly and then use them to manage your business. I encourage you to develop a plan for your business. It's usually a living document which puts into writing your vision, your goals. It can be short, it can be long. There are a couple of examples linked to here. There's no particular have to, but in the document, you describe the problem you're solving, the solution you're offering, the market, who your competition is, any logistics associated with your business, what vendors you're going to use, what are supplies going to cost, what's the lead time needed to get parts, etc. It'll include your financial forecast, a description of the team members you're working with, whether they're employees or just volunteers or whatever. They're all part of your team. And it'll describe your business model. Are you a membership organization, a fee at entry organization? What? Um, all of that's in there, and that includes your cash flow forecast as part of your financial forecast. Um, the people you apply to for loans or financing are going to read it cover to cover. They have read many business plans. Some stuff is going to leap out at them as being, shall we say, imaginative. And other stuff, they'll say, oh, no, this seems conservative to me. So do provide objective third-party data when you can. Even if it's imperfect, having some reference to third-party data makes it more credible. And if you've made any assumption about a cost or about what kind of market share you're going to get, how many people come through the door, put the information that went into your assumptions off to the side. Document it there on the side of your spreadsheet so that when somebody asks you about it, you can provide chapter and verse to tell them exactly what assumptions went into the numbers so that they can recreate the exact number that you created. That is going to be incredibly important to the credibility of your plan to somebody who's reading it. So we're finally at the end. You start with the problem that your customers are facing, defining exactly who has this problem, who should I market to, define your solution, and describe it in a value proposition statement for your market. That will allow you to start developing your business plan and some draft financials and a cash flow projection, and then start setting up your business. Once you're in business, you start testing. Do people actually buy it? You measure your results carefully, you tweak how you're operating your business, and maybe you come back and end up redefining the problem. So maybe you go through the circle a few times before you even get to your actual financial plan because you're doing your market research, coming up with a value proposition, trying it on people, and then realizing, nope, I'm not quite getting as much interest as I was hoping. So let me refine what I'm going to offer a few times before I feel, okay, yeah, now I've nailed it and I'm ready to start setting up the business. It's an iterative process, and that's okay. Better do the research and change your mind a few times than it is to start a business that's not going to work. So, my conclusions. Starting a business is a lot of work. Yep. Hopefully, I've conveyed that through all the things I've touched upon today. I'll say briefly, because I realize it's been over an hour and a half, which is not brief, but there are a lot of elements to starting a business. So it may not be for everyone. And if in the process of doing some research, you realize this isn't for me, then that's a great thing to realize earlier rather than later. So research is good. Um, know your customers, know your competition. Knowing them well is a form of research, and they will help you define your business. So the more you know about them, the better off you're going to be in your business. If you can, try to start small, test out the market, learn from your test, and adapt your business model to the market. So, for example, for the roller skating rink, maybe you don't offer all of that at the very beginning. Maybe you only offer the part that you think is going to be most central to the long-term success of the business. And you add the other parts later as the first part starts to become cash positive. That would be a way of growing your business and reducing your initial investment so that you can self-fund some of the later investments. And here at SCORE, we're here to help you start and grow your business. Our motto is we're here for the life of your business. We're volunteers, we're a nonprofit. We're not here to sell you something. We're not here to tell you if it's a good idea or a bad idea. We're here to tell you, I think you've done your research well, and you know as much as you're gonna know before you have to make this decision. Or alternatively, I think some more research is needed, and I don't think you should make this decision yet because I think you need some more data. Um, we can help you prioritize stuff. We can help you identify things you might have overlooked otherwise. We can help reassure you that some of the anxiety you're experiencing is anxiety that we've all gone through and is perfectly normal. So we're here to support you as best we can. I'm happy to entertain questions going forward. Before I do, I just mentioned that we offer free mentoring. We offer a series of workshops like this. Not all SCORE workshops are free, but all those offered by Maine are. We're a nonprofit. We're a partner of the Small Business Administration. We have, I think, roughly 230 chapters around the United States with over 10,000 volunteers, and that makes us the largest volunteer mentoring organization in the US. If you'd like to sign up for Mentor, you can use this QR code to do so. And that's all I have to say other than responding to your questions. So I'm happy to answer any questions that you have.
You answered most of my questions. You answered my questions, so I don't have any more questions really.
Okay, great. Well, thank you, Dwayne.
Um,
Anyone else?
Wait, I had a question for you. So the business I'm looking to start is a consulting business. So some of those startup costs that you were talking about won't really be
Right.
the same. But what if I'm looking for a mentor and I'm filling out the request online? What kinds of things should I put in there to kind of get in the right vein of the kind of mentor that I'm looking for?
Just saying you're starting a consulting business will do it.
Okay.
Um, I've been a consultant myself. I used to work for Strategic Planning Associates many years ago, and then I was a freelance software developer, which makes me a consultant. Um, and so we have a number of mentors in Maine who have at one or more times uh, been a consultant themselves or are currently a consultant. So there's a whole different set of considerations to go out on your own. If you're already a known name in the industry, it's a lot easier. If you need to establish your name in the industry, you're probably going to have a couple of lean years ahead of you as you go to a lot of conferences and trade shows.
Thanks for that.
Any day. Other questions?
one more question, sorry.
Sure. Yeah.
So when you starting up the business plan, right? So when you start out, you want to start with what you're planning to do, or do you want to start with like the numbers?
The numbers really follow from what you want to do. So everybody starts with what they want to do. That's what probably got you thinking about this to begin with. Um, and so the next question is, who am I going to sell to? What is the market? How big is it? Where is it? What can I sell it to them for? What's the maximum they'll pay? How often will they visit? Will they bring their friends? How many services do I have to offer to get more people in the door? What do I need to get coming in the door to cover the overhead of rent and loan and real estate taxes and utilities? Um, those numbers all are going to come from your thinking about how many people are going to get coming in the door and how much are they willing to pay. And until you have a sense of how many patrons you're going to have and what your fees are going to be, you're not really in a position to project revenues. We generally recommend that you project revenues first and expenses second, because it's miraculous how people who project expenses first then project revenues to just slightly exceed expenses.
So it would be better to get a fire marshal to go inside the building and project the occupancy of the building.
Yeah. I mean, you could also just do some quick back of the envelope calculations for yourself first to say, well, okay, we're going to have to wall off this much for prep areas behind the bar, um, and we're going to have this much allocated to pickleball, this much allocated to stuff that's not customer space, and then this much to the rink. And you could
Yeah, we
probably
did
just
that
take
already.
a crude drawing into the fire marshal and say, we're going to have this many square feet for rink, we're going to have this many square feet for pickleball, but pickleball never has more than 4 players per court. So that's limited capacity. The bar seating area, if they're seating, would have this capacity. The roller rink has a certain area, and then there's space to put on your skates, take off the skates. Maybe you have a skate rental room. But anyhow, you could take that diagram into the fire marshal, show them where the exits are, whether they're single door or double door exits, and they can probably say, well, short of inspecting it, I can tell you based on the square footage, this is probably the number that I'd come up with.
Okay.
And that would give you a starting point to use in your calculations. They would
Okay.
then need
That
to
makes
come and
sense.
inspect it once it's built out to give you the official final number.
Okay.
But that would be a great way to start. And you would quickly, with very little of the fire marshal's time, which is your objective, to not waste any of their time to start with, um, you could very quickly get an idea of what the maximum occupancy is likely to be. And if that's too small, that's a problem. If it's larger than you need, then you're all set. And I would guess the fire marshal is going to give you a conservative estimate. The final number would hopefully be greater than what he gave you just based looking at the paper.
Which would also help with the projections and the spreadsheets and
Right. So
yeah.
when you get the final number, you revise your maximum patronage numbers, and instantly you have new revenue projections.
Awesome.
You may find there are other things that limit your attendance, though. If you're having a rental room, how many sets of skates do you want to invest in to rent? That might limit the number of people on the rink, and it might have nothing to do with the fire marshal. You never know. So it can get complicated.
Yeah.
Other questions?
Yeah.
Hi, I have a question about the different kinds of businesses. I'm wondering if there's any advantage to sole proprietorship over like a single member LLC, because it seems like taking on all of the liability can be quite risky. So is there any advantage over just aside from, ease of establishment for the sole proprietorship?
I mean, that is the major advantage.
It is.
I can
Okay.
say, Domini, 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 I'm a sole proprietor, put a shingle out, and I'm in business.
Gotcha.
Um, that means I'm doing business as me. I have to use my name. Um, but I could have a DBA doing business as, so instead of being Whit Ford, I could be Ford and Sons or something
Mhm.
as my DBA. Assuming that my boys have the slightest interest in being in my business. But so that's the main advantage is it's quick and simple and it's the default. If you're operating a business and have not registered some other form of the state, by default, you are a sole proprietor. Um, the the disadvantage is liability. Um, you can certainly start as a sole proprietor, but if it's the difference between starting now and starting in 3 weeks, which is the time I take you to get the paperwork back from the state, um, is it worth confusing the first few customers that you give invoices to? When you give them their second invoice, it's from a different name and you want the check written to a
Sure.
different company name.
Gotcha.
Um, so, because when you're operating, even if I operated as Whitford LLC, um, I would then need to make sure that all the checks were made out to Whitford LLC,
Mhm.
and the bank account I open would have to be in the name of Whitford LLC. And therefore, if I
Mhm.
tried depositing a check written out to Whitford to my company bank account, the bank might reject it,
Right.
saying it
Okay.
wasn't made out to the company.
Yeah, that makes sense. Thank you.
So um, you can certainly start at one and then transition to the other. But if the transition is going to be soon, think about potential transition costs
Mhm.
and marketing hassles of having to educate your customers about a new name.
Yeah, that does seem like it could be a drawback. Okay. Perfect.
Other questions? Well, thank you all for sticking in here as long as you have. And most of all, thank you all very much for all the questions. Um, Believe it or not, a lot of workshops these days, I get no questions. And I love questions. So thank you for participating and jumping in when something came to mind. And I look forward to perhaps seeing you around Score one of these days. So enjoy the afternoon, stay warm, and good luck with your enterprise.